What if the stock market's next 10 years aren't random, but already mapped out by history? Because every major bull run follows a hidden blueprint: rates, AI, valuations, fear, and market leaders on sale.
All right, let's dive right in. What if the next few years in the stock market weren't some big, unknowable mystery? What if history already left us a blueprint, a kind of recipe for what's coming? Well, that's exactly what we're going to decode today.
Let's start with a number. 400%. That's what a typical decade-long bull market has delivered. It's a massive number, right? The kind of return that can completely change your financial picture. And it's happened more than once.
So the billion-dollar question is, are we in one of these historic runs right now? And if we are, how much runway is left? To figure that out, we need to see if today's market actually fits the historical blueprint.
So here's our game plan. First, we'll look for the pattern in history. Then, we'll break down the 5 key ingredients that always seem to be present in these huge runs. After that, we'll put today's market to the test and wrap up with a clear strategy for 2026 to 2030.
Okay, first things first. Before we can look forward, we have to look back. We need to see the hard data to prove this pattern even exists.
Okay, check this out. Just look at the consistency.
The 90s bull market gave us 417%. The run after the 2008 crisis, almost the same, 400%. The pattern is just undeniable. Now here's the kicker. Look at the current run since 2020. We're sitting at around 200%. If history is our guide, that suggests we might only be at halftime.
And you know, this isn't just some modern thing. Over 150 years ago, a farmer named Samuel Banner drew up this market chart, and it's been eerily accurate for decades. And guess what his chart says for right now? It points straight to years of good times lasting well into the 2030s.
So, we see these huge, decade-long runs keep happening. But why? Well, it turns out they're not random. They actually follow a pretty specific recipe, a blueprint with 5 essential ingredients that have to be there.
And here they are. These are the 5 ingredients we're going to dig into. You need a monetary tailwind, a big, exciting story for the market, valuations that have room to grow, a healthy dose of fear, and you need great companies on sale. Let's break them down.
First up, the monetary tailwind. To put it simply, this is just rocket fuel for the economy. It means interest rates are falling. When money is cheap to borrow, companies expand, people spend, and a lot of that cash ends up pushing the stock market higher.
And this chart says it all. Back in the 80s, rates were slashed from a sky-high 15% all the way down to below 7%. That just unleashed a flood of money. Now look at today. Rates peaked at around 5.5%, and they're already starting to come down. There is plenty of room for them to fall further, giving us that classic tailwind.
Ingredient number 2, you need a great story. Seriously, every massive bull market is built around one huge, powerful narrative, a technological shift that's so big it grabs everyone's imagination, and more importantly, their investment dollars.
In the 1990s, the story was obvious. The internet. It was new, it was changing everything, and everyone wanted a piece of it. Well, what's the big story today? It's the AI revolution, without a doubt. We are in the very early days of a technology that's going to reshape literally every industry on the planet.
Okay, next up, PE multiple expansion. Now this sounds a little technical, but it's really all about investor mood. It just means people get more optimistic and they're willing to pay more for a stock compared to what the company's actually earning. That optimism is what can turn a good market into a great one.
And the data here really drives this home. In the 80s run, the market's PE ratio more than doubled off the bottom. Where are we today? Well, we're sitting right around the long-term average. And this is so important. It means we are not in some expensive, crazy bubble. There is still a ton of room for that optimism to grow. So the bottom line is, the market's valuation today is fair. It's not dirt cheap, but it's definitely not euphoric. And that means there's still plenty of gas in the tank for this PE multiple to expand and push the market a lot higher.
All right, ingredient number 4 is my absolute favorite because it feels so backward. Every single great bull market has to climb a wall of worry. Think about it. These things don't start when everyone is happy. They are born out of fear and uncertainty.
So do we have a wall of worry today? Oh, you better believe it. Just turn on the news for 5 minutes. You've got geopolitical tensions, political drama at home, constant worrying about what the Fed will do with interest rates, global conflicts. It's a lot. It feels messy, but from a market perspective, all this fear is actually a bullish sign. It means we're a long, long way from the top.
And the last piece of the recipe, you have to be able to buy the leaders at a discount. Even when the market is going up, You need good entry points. You need the best, highest quality companies, the ones driving that new market story, to go on sale every now and then.
And we've seen exactly that happen. Just look at some of the giants of the AI revolution. Microsoft, Google, Amazon. They've all had big corrections, anywhere from 20 to 35%. Palantir got hit even harder. These aren't just any companies, these are the market leaders. And the fact you could get them at a discount, that's the fuel for the next leg up.
So let's run the final test. Is today's market a bull market according to the blueprint? Do we have that monetary tailwind? Yep. A huge market story in AI? Check. Room for valuations to expand? For sure. A massive wall of worry? Absolutely. And leaders at a discount? Yes. It checks every single box.
So when you put it all together, the conclusion is pretty clear. Based on that historical blueprint, this bull market is alive and well. And, maybe the most exciting part, it looks like it might only be halfway finished.
Which brings us to the most important part of all of this. What do we do now? If the blueprint is right and there's a lot more to go, what's the action plan for the rest of the decade?
Well, the strategy becomes pretty straightforward. With so much fear still out there, history suggests this is not a time to be on the sidelines. It's a time to be greedy when others are fearful. But, and this is the key, you have to keep watching the ingredients. If interest rates suddenly start to skyrocket, or if valuations get completely out of control and everyone you know is a stock market expert, that's your warning sign. That's your trigger that the recipe might be changing.
So we've laid out the blueprint that history has given us for these huge multi-year bull markets. And it really seems to be playing out right now, in real time. The only question left is, what are you going to build with it?
Think long-term. Follow for stock market cycles, investing strategies, and wealth-building insights for the next decade.